So, Preston, do you think it would be fair to say, or is it at all accurate to say that leverage has a very large part to play on the Bitcoin price?
Oh God, yeah.
Yeah.
And it's not anything that you know, haven't said or Andy hasn't said for years now. When you're dealing with a credit-based system where there is way more credit in the system than the baseline unit, fiat units in the system, and it's expanding and contracting like an accordion, and I forget what the ratio is between baseline money and the credit that's in the system, but it's an ungodly ratio. And so when it contracts and everybody likes to compare the value, like how much is Bitcoin worth? They like to compare it to fiat units. So if you're comparing it to those fiat units and those fiat units are highly comprised of credit and it's expanding and contracting, well, get ready for a wild ride, especially as you're at such a small market cap like we are today of, you know, slightly under $1 trillion. Or now you're quite a bit under $1 trillion. That's like nothing in the grand scheme of things compared to the size of these other markets, these equity markets and bond markets and whatnot. So people should expect this. This is you know, that's why I pay so much attention to these central bank balance sheets, and why I'm constantly making posts about it, because if that's tightening, you know, the units are being sucked out of the game. It's really that simple. Now, as you go through each contraction and expansion, expansion and then contraction, you should see the value of Bitcoin going up through that period of time. And in my opinion, you should see Bitcoin outperforming pretty much all equities and bonds throughout each one of those cycles. But you have to look at them if you're choosing a period of time to look at the performance relative to everything else, because that's the name of the game of investing, is what was your performance relative to all the other options that you had on the table, and then how are you defining that time horizon to conduct those measurements? And I would tell you, use a credit cycle. Look at when they're expanding, when they start expanding, when they start contracting, and then when they start doing that again. And that's one iteration. That's one cycle. And how does the thing that you own perform through that period of time? So, you know, if I was going to walk a person through that right now, I would tell you we had a huge impairment during COVID. The price of Bitcoin went down to, I don't know, what did it go down to? 4,000, 3,500 or something?
Yeah.
Right? We're still going through the contraction phase of where we're at right now. So I don't think you can compare where it's at right now. But let's just say we found a bottom tomorrow, right? So the way I would conduct that measurement of the performance is I would say, all right, 2020, March of 2020, we were, I'm going to use round numbers here, we were at 4,000. Today we're at 20,000. You might argue we got the 17.5 or whatever, and that'd be fine. But for simplicity, I'll just say we're at 20,000 was the low. For a 5x return in, call it 2 years, right? 500%. So that's how I think people need to think about the performance of Bitcoin. But here's how I would define how most look at Bitcoin. I bought it at 40,000, you know, like a person that I was chasing after because my friend told me to buy it. So I bought it at 40,000 and now it's 20 and I'm down 50%. And this is a disaster, and they don't know what they're owning. They don't understand why, like what it's trying to solve by pegging global money or any of that stuff. And they're not looking at the fundamentals of the adoption on the L2 and all this other stuff, right? Your typical person, that's how they're looking at this. And so you have to have the right framework. You have to understand what it's even solving. You have to understand the competitors to it. If you're going to you know, a lot of hardcore Bitcoiners would say there's no competition, but they have a rationale and sound logic to define why they might hold that opinion. So just some general thoughts on how people need to think about credit cycles and how they need to look at their performance through those credit cycles, and that they should expect these things until it becomes a global settlement layer. Like, you're going to continue to feel these things.